Welcome back, everybody, to the video. The portfolio today is sitting at about 1.1 million USD so far. And in this video, what I'm going to be covering is I'm going to be covering my full research process on how I generally find stocks. Okay, so I'm going to treat this video like a full course. Like it's really just a free course for you guys, honestly. I hope this video is a very valuable video for you, and I hope you get rich, man. Okay, so I'm just letting you know I'm ethnically Chinese. So in Chinese, this is basically 希望你发财. So I hope you get rich, bro. Okay, I really do. Okay, I really hope that you take notes during this video. I hope you consume the entire video as well, because I'm going to try to cover everything from step A to Z. And in terms of the research process, I'm going to show you exactly what are the buttons I click as well, and what type of research I'm doing. And I'm going to show you with my screen sharing right here, right? Hopefully you can take this process and use it for yourself. Okay, I'm just letting you know the first thing is that I am not a finance trained person. So I've never worked in the bank. I did go to business school, but I didn't take finance basically. So like this is a process that I just developed myself over the years. And when you start investing, when you get into the market, generally you also have things that you like to do before you buy a stock, right? So these are generally the things that I do specifically, and I'm going to show you my track record as well, right? I'm not like the greatest investor in the world. Okay, I don't win at everything. I lose some. However, from my losses as well, I do learn a lot, and that basically helps with my wins at the same time. All right. So, like I said before, not financial advice, just a process that I want to show you guys, and hopefully this is valuable to you. So smash the thumbs up or something, or comment something down below. So then just let me know what other videos that I should make as well. All right. So let me get right into it, and I'm going to try to talk a bit slower for you guys at the same time. Okay. So this is my full research process on how I find stocks that 2 to 10x. Yeah. Okay, so I do not know what your net worth is, but basically, whenever I try investing, I'm really looking for stocks that are really gonna change my life. All right, so that's why this channel itself is called Generational Wealth. Okay, so like everything else that will not change my life, right? I don't really care. So, for example, if people tell me, say, why don't you just go into a safe investment and get 10% or 5% or 7% a year, or just buy the index, for example. I have bought the index in the past, by the way. I don't hate the index, but sometimes like yeah, like I do want I'm okay to take more risk if I am able to get a higher return. And generally, you want to take more risk only if there's a way bigger upside than the risk, basically. Okay, so this is my investment process. All right, things that, for example, is like if they're able to grow 20%. Okay, but the thing is in investing, 20% or like returns in general are not confirmed, right? So someone might say I can give you a 20% return, but they cannot guarantee it. So it's like no matter what, you're still taking risk, even if it's a big company, right? However, if it's a guaranteed return, for example, right? And I'm going to show you I'm going to talk about what is a guaranteed return. So for example, if there's a Bitcoin bull market, right, and the bull market has started already, that's not really guaranteed, but it's a very high probability that it's going to pop like 10% minimum, for example, right? So like those types of things where it's like, okay, there's clearly something going on right here. The momentum is very obvious and stuff. And then you're just trading something on the short term. You're not really investing, right? Then I'm sometimes like that where it's like technically guaranteed. I do go in sometimes as well. Okay, but once again, not financial advice. All right. So before I start, I should tell you my how do I say this? My track record. Not a very long track record, so do give me a pinch of salt. All right. So these are some of my wins and some of my losses, and I'll just let you know that you will learn so much more on your losses because your losses are just so painful. Like those things will keep you up at night. Making more money actually doesn't keep you up at night. You can sleep very well. It's like your losses will really drag you down. Okay. So some of my biggest wins are on ELF. I got about 40%. My HIMS position was 10x at one point, so I put in 50k, and then it netted back about 500k. Okay, now it's down to about 330, so I think it's about a 6 to 7x so far, but I'm still holding this. Palantir, my average position. So I actually bought in when it was like $28, and then it went down, and then I kept buying as it went down. Okay, and then my average position was $14, and I sold at 60 basically. Okay, my Robinhood position, for example, is also up 3 to 3.5x so far. And then obviously this is everybody's position, but if you just held Microsoft, Google, Amazon, I actually got a 50% gain on these as well. And then my AMD position is up about 40%. and then this is CrowdStrike. So this is a cybersecurity company. This was up about 35%. But the reason why I don't have this position anymore is because they went through a scandal where they had a cybersecurity attack. Sorry, not attack, but like a lapse, and then the entire world was basically affected by them. So it was a big reputational risk. So I basically just sold off the position, even though I was still in the green. Yep, because I expected it to go down. All right, then my most painful losses. Okay, my most painful losses was the Alibaba crash. Okay, so I do call it a crash, by the way, because it's like to this day, Alibaba has not recovered since then. So even if I held the stock, or I was they call it a bag holder, right? Even if I held the bag till now, I still would not have taken back my money. So I don't regret selling it at all. I'd rather sell and cut the position, and then just get out of there as quickly as possible. Okay, so let me just go to the 5-year chart. Okay, so I think I bought around near the top, by the way. I thought I was a smart ass because it's my first time investing in the markets. I think I bought around somewhere around here, and then like I didn't really understand the markets at that point in time, so I didn't sell, and then obviously it went downhill all the way. Yeah, and it went all the way down. Yeah, and then yeah, it still has not recovered, right? So it's like it's still a very very small. I won't say small company, but like yeah, the stock price basically never recovered from there. So even like I sold it as it went down, for example, all the way to the bottom. Yeah, there's no point to like buy back in because it's like yeah, the Chinese stock markets are just very uninvestable from an investor standpoint. The money is just not flowing there. Yeah, even though that their revenues and their sales are okay, stuff like that. Right. So that's just the first thing I learned about the Chinese market. All right. The other position that I am down quite significantly is I'm down 35% on this position right here. This is my Meta Planet position, and can tell you like I'm if like the bull market does not recover, for example, in the crypto bull market, for example, like I'm still gonna hold this position basically, but I will buy down through this position. So as the position like goes down over time, I will still accumulate more shares over time. All right, so I want to be transparent. Like I do have losses, I don't win all the time, and yeah, normally the losses you can see, I'm still thinking about this position here. But then again, yeah, like investing is that's why you win some, you lose some. Okay, yeah, but every time you lose money, I do suggest that you go and learn why you actually lost. So, for example, Alibaba, I know why I lost money. Okay, in 2021, what happened was that um, the Chinese president basically cracked down on the tech sector, and then Jack Ma was basically arrested, and then there was a bit hoo ha whatever, and then investors basically lost confidence in the stock, etc. Okay, this will probably never happen in the US, but in China it happened. Okay, and then basically the entire sector basically reduced like all of the stock market gains. I think they wiped out about $1 trillion in investor assets, for example, across China and stuff like that. And then it just became it just became really really bad for investing in general. Yeah, all the Chinese firms they basically lost money, and yeah, everybody was very very bearish on stocks. Okay, so that's why I lost money here. Okay, this one over here, I'm down. The reason why I'm down, I can tell you exactly why. Is because the crypto treasury companies, for example, everyone thought that the MNAV was something that they can basically hold or maintain. But then, yeah, there was a compression of the MNAV as the Bitcoin price basically didn't move or was like stationary and stuff like that. And so the big dogs, for example, MicroStrategy also went down. So it's like a full rotational tilt of like all of the crypto treasury companies experience a similar down pattern as well. Okay, so every time you lose money, you want to make sure you understand why you lost money. Okay, and like how you can do things differently, right? So Alibaba, now I don't invest in Chinese stocks at all, basically. And then this one met Bitcoin treasury play is my first Bitcoin treasury play. So it's like now I know that okay, MNAV compression, like it will happen eventually, for example, right? So even though you lose money, like you still can be positive and you still can learn things, and you want to make sure you learn these things so that next time you come in the same situation, you don't get cooked by the market, basically. All right, yeah, okay. If you see, for example, these are like majority of the buys that I've ever had in my lifetime. I don't buy a lot of positions. Yeah, because it takes a lot of time. I won't say it takes a lot of time, but it takes a lot of focus to actually go and research a company, right? And so when I buy, I actually do buy in tranches. I do buy in concentrated positions. Okay, so I'll give you an example of a concentrated position for me. For example, when I had about 400K in my portfolio, I bought a new position of like 50K, 40 to 50K, for example. And so 50K is about maybe 1/8 or maybe about 16% to 20% of your net worth. And that is to me is a big position. Anything above 15% is considered a big position to me, because yeah, like obviously is a big amount of money relative to your net worth. So don't think that like for example 50k could be small for you or 50k could be big for you. It does not matter. But what matters is that the percentage of your portfolio, you don't want to risk so much on your new bets. So every time you buy a new company, I see it as a massive risk because you just went in the stock, right? If you've been holding a stock for a very long time, you generally know the investor behavior. You generally know the price action, right? So, for example, maybe Google right here. Generally, you know the price action is quite consistent. It's like it'll usually go up over time, and then it'll consolidate, and then it'll go up over time. Like it's a very straightforward pattern. And in technology, they will continuously improve. You can see, for example, it goes up. It may come down sometimes in a slight bear market, 2022, but generally, over the long period of time, it should go up. Yeah, you can see it's like literally a pattern. Yeah. So yeah, the longer you hold a stock, I would say the less risky it is, purely because you understand the behavior of the graph way more. Yeah. Okay. Um, yeah. Okay. So now I'm going to show you step by step of what I'm going to click generally of the things I do. But I'm going to show you, okay, there's like step one of my process, which is just find ideas. And then step two, the research. So actually, what are you researching? What are you looking for? And what data are you actually looking for? That's research component. Okay. So there are a bunch of stuff I do. And then lastly, is actually the most important, is your entry price. Okay. So yeah, you will only make money when you enter. People think you make money when you sell. That's actually false, because you could buy the correct company, but you could buy it at the wrong price. Okay. So an example of this is my Alibaba position. So in 2021, for example, Alibaba was like just after COVID. It had record earnings, profits, etc. Let me go back to Alibaba. Okay, so this was like a fantastic company across the board. Everything was green. You can see here, everything is green here. It's a profitable company. They're growing revenue. They're growing net profits, right? So from a fundamental perspective, you can clearly see like this is the correct company. Like this is a fantastic company, very well run, and all of their uh, profits and earnings are just going through the roof. Okay, so let me just put maybe a 10-year chart. Okay, can you see like this company is like fantastic? Like you cannot fault this company. Like they're growing their every single year, they make more money than the last year. Okay, and then every single year generally, their profits has been like decreasing over time, but like their revenue has been increasing. Okay, so that's the only fault generally that you can have about this company. All right, net income, okay, a bit choppy here, but yeah, generally when you can increase the top line, you can always squeeze out some bottom and profit as well. All right, so that's what I mean by you can choose the correct company, right? But you can go in at the wrong price. Okay, so that is my fault. My fault is I chose the correct company. It's just the wrong price. Yeah. Okay. Because right now, for example, if you are unaware, if you just bought Alibaba, for example, you did not have a position in Alibaba, right? Okay, let me 6 months. Yeah, you can see here, for example, if you bought Alibaba at the start of this year, you have been up 18%. So actually, it's the correct company, and then it's at the right price at the start of this year. Something like that, right? So you have to think about it that way. You cannot think about, um, yeah, like I only make money when I sell. No, you make money actually when you buy, because your average price really determines how much profit you are going to make, by the way. Yep. Okay, so this is a lesson. I don't know whether you want to write this down in your notes or whatever, but yeah, this is a lesson that I really learned. All right. Okay, so the first thing that I generally do, I go and find ideas. All right. So for find ideas, when I say watch YouTube, I really mean like go to YouTube, and then like you just go and watch financial stocks channels, and etc etc. Okay, so okay, so sorry, like my YouTube channels, yeah, a bunch of stuff. But basically, you can go and watch like I believe Jeremy Financial Education is a channel that I watch sometimes, for example, and I do watch other content creators. It doesn't have to be a big content creator, because a lot of the times that yeah, smaller content creators may have different ideas and stuff like that. But this guy is just entertaining to me, and so sometimes I watch him. Just letting you know. Yeah. Okay. So yeah, what I do is I go to YouTube, I go and find certain areas, and then just go and watch people and what's their opinion on a stock. So in this phase right here, I'm not looking to buy anything. I'm looking for ideas. So I'm looking for the ticker symbol, basically. I'm looking for the company. That's all I'm looking for. All right. The second one that I do is sometimes I go on X or Twitter. And X or Twitter, you can find a lot of interesting people. But the people that I follow can just be like VC people. They can be like stock investing people. They can be like the all-in podcast people. Um, they can be people in technology, right? For example, it's just random stuff, right? Yeah, yeah. And then third thing is that you want to identify companies that you already know that in your circle of competence. All right. So this one here, I don't know what job you have, but you could be an engineering person, right? You could be a pharma healthcare person, right? So pharma healthcare, you probably already know Novo Nordisk. You probably already know Pfizer, for example. I don't know, right? If you are in semiconductor, okay, if you're in semiconductor, this is quite straightforward. You know ASML. You probably know TSMC. You probably know Nvidia, right? All of these big names that have been very hot recently. Or you probably know Broadcom, right? So you know AVGO, right? For example, for me, it was very straightforward because like my industry is like internet advertising. So in internet advertising, for example, yeah, it's basically the big tech names, right? So everybody knows the big tech names. It's like Google, Facebook, Amazon, for example. And in my job, for example, I spend money on these platforms, so I know exactly how they make money. So it's very clear to me on like, yeah, I should buy these positions. To be fair, they're also the biggest companies in the world. So like, it wasn't a really very difficult position. But then again, it's like the more you understand how these people make money, then it's like generally you will make money as well because yeah, you're literally giving them money. Okay, so I do pay Facebook on a regular basis for their ads and stuff like that. Google as well. Amazon last time I did, so I did understand the business. And then for example, sometimes I use like AWS for some software and stuff like that as well. Yeah. Okay. Yeah, so you want to identify companies you already know, and this is very easy because it's like you won't have any risk of like not knowing the industry because you generally know the trends in your job already or in your business or whatever. All right. The fourth way is that you can use a screener. So a screener is, for example, let me just show you guys. So like this is a screener. Okay, you can use any website you want, but I just use this website, for example. And then this screener here, you can basically filter it by your metrics, right? So specific metrics that you're looking for, these are particularly interesting. But I'll just show you what I apply for example. Okay, so what I'm looking for is that market cap to me is important because I'm not looking for like massive companies. I'm looking for smaller to medium-sized companies, and then I expect that their market cap can grow over time. Okay, so I like to buy companies that are maybe under I would say anywhere from like 2 billion to $10 billion range. Okay, so that's the first thing right over there. Average revenue growth. So I want it to be positive revenue growth. I want every single quarter, right? You should be making more money than the less. Make sense? All right. I want you guys to be profitable as well. In this economy as well. You want to avoid buying unprofitable companies. Okay, so you want to always have positive net profit. If you don't have positive net profit, right, I'm not gonna put my money and risk my money there because there are always better ways to make money. All right. Gross margin here is important because if you're not aware, the higher the gross margin, the higher the profit, the net profit will be. Yeah, I mean, in general, it's like if you have a very high gross margin business, for example, like Google, for example, right, they sell ads. It's almost like 95% gross margin. It takes them almost nothing to deliver that ad to the person, right? So gross margin, you cannot expect that everything is above 90%, but I can expect over 50%, right? This is just a minimum. Okay. Um, and then how I would say is, let's see, what else? Gross margin, net income. So net income growth quarter over quarter. I don't need, this is not very important to me. The reason why is because if you are a fast growing company, I don't expect that your profit is going to be increasing over time. I do expect you to make more money every single quarter, but I don't expect you to make more profit every single month because every single quarter because I do hope that you take that money and then you reinvest it. And I don't care if you don't make any money. If you make like $0 in profit, but you keep growing, that is what matters. That's what's gonna help my stock price and my money gonna grow. Basically, that's how I think about it. All right. And then industry, I don't care about it. Any industry is fine. Operating margin, okay, probably this one is like positive operating margin. And then PE ratio, I don't really care as well because in general, I'll talk about valuation later on. But yeah, generally, I want to see that you are growing your company and you have a very good. Okay, if the company is more than 5 years old, for example, you may want to put this as well. Like positive revenue growth. But if the company is very young, for example, like 3 to 4 years on the stock market, they don't have this data right here. So that's why I put any, and you don't want to like remove that stuff. Okay. So I'm just gonna apply my filter, for example, and then once again, I can just go and see all of the companies here. Okay. Obviously, when you go down the list, you want to figure out things that are like you've heard of it before. So for example, like Wingstop. Wingstop sells chicken wings, I think. Planet Fitness is a fitness corner. Skechers is a shoe brand, for example, Paylocity. I don't know what this is. So for example, it's like if things are interesting to you, then you go and shortlist these things, right? You're going to put it into your to your watch list. Obviously, you go and click into it and then like go and research yourself. But anything that seems interesting to you, for example, this one's a technology play, right? So anything technology generally should be high margin in the future and it should grow very fast as well. Okay, so these things that you may know, you may want to also use that information and you go and research for yourself. Okay, let me just I'm just gonna open up to the 100 here. Yeah, you just want to go down the list and then you're going to figure out what you already know. Okay, so I know Wix is a website builder, for example, right? Dropbox is okay. Last time I did invest into Dropbox, for example, but like it doesn't really grow, so like I don't care about it anymore, right? Yep. Oh, you see, Elf Beauty. Elf Beauty is one of my positions, so it's like this fits into the category, for example. Yep. Okay, so this is basically exactly what you want to be doing. You just gotta filter and just gonna like look for yourself. But of course, the names that seem familiar already, you go and research for yourself first, right? Yep. Okay, so that's basically what I do in a screener. Okay, sorry. Just wanted so that you can screenshot for yourself. If you need, just to summarize one more time, gross margin generally above 50%. Mid cap companies, okay, market cap this one. If you want to buy a bigger company, please don't let me stop you. Okay, if you want to buy a 10 billion to 200 billion dollar company, go and buy, please. Don't let me stop you. Okay, I'm just saying like sometimes I look basically in between this range. That's all. Yep. And then afterwards, positive net profit, obviously, revenue growth positive as well, positive operating margin. Yep, and there we go. That's our preset right here. Okay. Yep. So the next thing, oh yeah. Okay. So the next source of ideas that you can go after is the top 500 companies list. All right. So if you have absolutely no idea, you're just a complete beginner. Okay. You can just go to top companies right here. Okay. So this tool right here, what they do is they basically like obviously they're gonna have the largest companies in the US by market cap. You're gonna look at companies that are everybody knows already, right? So all the top 10 probably you already know. Okay, besides maybe TSMC and Broadcom, right? But all these companies make a ton of money. So even if you want to buy these companies, no problem, zero risk. I'll just tell you, zero risk. Okay, yeah, absolutely no risk. All right, and then afterwards you can go and see more companies that you're interested in here as well. So you just go down the list and you go and see what companies that are interesting to you, and because they are already in the top of market cap, right? You can ensure that they already have real revenue and real profit, and then you can basically see, you can see exactly right here. Like net income is basically profit. Okay, so yeah, if a company is doing like $80 billion, $50 billion in profit every single year, you don't really have to worry about them. Okay, so if you want to buy, just go ahead and buy. Yeah. All right. Yeah. Okay. Then next one is what products you already use. So for example, this one is pretty straightforward. But like if you already use an iPhone, then you should probably use an iPhone on Apple. Right? You already know an Apple, right? If you, for example, I don't know whether you know what Yeti is, but for example, you buy Yetis that are the coolest. For example, I believe they are stocked already, so you can buy the Yeti cooler, right? For example, if you work in a semiconductor factory, for example, you surely know TSMC. You know how big they are in semiconductors and stuff like that. And Trump keeps talking about them, for example. Let me just find one more. Oh yeah, maybe PlayStation, right? If you play PlayStation, right? Yeah, then there's like Sony. So Sony is the stock, the ticker symbol company. If you play GTA 6, for example, okay, I know like 99% of my audience is guys. So if you play GTA 6, for example, I am considering buying Take-Two Interactive, by the way, of stock. So that's like a potential company to buy as well. Okay, so if you are not aware, Take-Two, the gaming company, it is a public company. All right, so you can go and see the financials. I think they are a bit expensive now, but at the same time, like GTA 6 is going to be massive. So I do believe that if I buy some position here and just wait till next year in May, I'm definitely going to make some money. Yeah, even if it's small money, I think it's not too bad. It's like I would say it's a risk-free, relatively risk-free investment, but it is a bit high. Just letting you know. All right. So you can see, like, even from your daily life, even from your like, how do I say this, fun times, recreational activities, you can find ideas. You can always find ideas, right? Yeah. All right. Step number 2. Okay. So this is the actual research process that I go through. All right. So what metrics do I look at for pre-research? So there's a pre-research process, and then after step 2, I basically select that this is the correct company, And then step 3, there's a bit more research as well. Okay, so I found my idea, for example. Now I'm gonna do research on it. Okay, so just now I found Paylocity Holding Company, and then I have this Wix.com right here. Okay, so what I'm gonna do is that I'm gonna show you what I'm gonna do to research, and I'm gonna show you in real time as well. Okay, so the first thing that I'm gonna do is that just now the first thing I'm gonna look at is revenue growth. All right, so let me show you right here. My bad. Is it pay loss? Yeah, sorry. Okay, so for example, this company here, I have no idea what it does, honestly. I just know they're in software, for example. Okay, the first thing I'm gonna do obviously is I'm gonna go to their website because I have no idea what they actually do. So they're HR and payroll simplified, for example. So they seem like a SaaS tool. They do finance, HR, IT. Okay, probably very very big as well. I use this tool called the Similar Web tool, and I just basically check the web traffic if they are an online business per se. So this is a software tool, so obviously web traffic is important to them. Um, yeah. Okay, so they seem pretty big. Okay, they seem okay, top employers, etc., etc. A public company. Okay, usually this tool works, but it doesn't right now. So I apologize. If you see the pricing, for example, okay, so the pricing has like just learn more, etc. So I would think that only big companies can buy this thing because like okay, you push to a sales team, so it's gonna be like a B2B software basically. So they're gonna charge a lot of money for this product basically, right? So you can go and see okay who is the CEO, etc. So I'm gonna take this name first. Okay, I'm just gonna take it and remember it first. All right. Later I'm gonna do something with that information. Okay, and then afterwards, yeah, okay. So the first thing I'm gonna do is revenue growth. My bad. I keep getting distracted. Okay, so I'm gonna go to this view and I'm gonna see the revenue. Okay, I want to see it on a 5-year basis. Okay, so if you see here on a quarterly basis, okay, it seems like everything is looking good, but there's something happened at this quarter, this year that really dipped. Okay, so this is it's just a sign of concern or whatever. Okay, but generally it's been increasing over the past 5 years, which has been good. I don't know how long this company has been public. Okay, so you can see there's been an acceleration in the revenue. So this is another fantastic good sign. All right. On an annual basis, let's see what has been happening in the past 10 years. Okay, so it's been increasing. So you can see this company grows. It does not grow very, very fast. You can see like 230 billion to about 1.5 billion, right? And this is about in 10 years' time. So it doesn't grow crazy, but it does grow consistently. So that's a very fantastic sign. Something happened in 2022 as well, where the revenue just jumped, increased. And now it's been slowing down a bit, but we'll just see what happens. Okay, you can see the net income as well, the orange line basically. It has been increasing over time. So this is a fantastic sign as well. So those are two. Okay, so you can see number 1 and number 2 have checked the boxes where both of them over the past 5-10 years, they have been increasing. So it's fantastic. So that one is like no worries about this company at all. Okay, from a revenue financial standpoint. Okay, the next one that I'm gonna check is valuation. All right. So valuation is this one over here. So it's about a $10 billion company. Okay, let me go to an annual basis. Oh, sorry, it's about okay 9.62 billion dollar company and about 1.6 billion rev. Okay, so valuation, I look at PE, right? So PE is here. It's about 42 PE, which in the software space is not very high. But then again, their growth rates are not very high as well. Like it's not like growing like a crazy clip, right? So technically, it's a bit expensive. Okay, the reason why I know this information is because I know other software names. Okay, so you can see these are other software names. These like Appfolio, Q259, Paycom, etc. So like generally, when you compare it to when you have researched other companies in the same field, you already have a sense of what's happening. Okay, I can give you an example. Okay, I know that Facebook, Google, Amazon, for example, they trade anywhere from a 25 to a 35, 45 PE, right? So I know this at the back of my brain because I've been investing into these companies for the longest period of time. So I know that in B2B SaaS, for example, B2B SaaS, okay, let's check Salesforce, okay? So the ticker symbol for this one is PCTY. Let me just pull up Salesforce real quick for you. Right, so Salesforce, what is Salesforce? CRM, okay, my bad, I forgot. Yeah, so what I do is that okay, I know that both are in software technology and both play in similar like selling to B2B. So investors when they look at it, they try to do like a comparison basically. So you can see like this one is trading at okay, last quarter is 74, but trailing 12 months for example is 42. This one's at 35. So technically it's like a bit more expensive. It's technically a bit more expensive than just Salesforce. Okay, so that doesn't affect my entire decision making. That's just at the back of my mind. Okay, so no too much of a red flag here on valuation. It's not too expensive, but at the same time, it's not too cheap. Okay, so that's just at the back of my mind. Okay, so I'll just put here on the checklist here. This would say, I'll say good. Everything, no red flags. No red flags, good. Valuation is like a bit expensive, but it's okay. It's not like crazy expensive. Okay, and then the next one is like margin of safety. So, what exactly is margin of safety? Margin of safety is basically, for example, your stock price could have gone up and then it could have gone down. All right. So if it's down from the high, there's a margin of safety. Okay, so you can see the high of this company um, is 305 right here, and then now it's sitting at 177. So it's almost half of that price. So there's a bit of margin of safety, right? Like in the past, people are willing to pay for this thing. It's more expensive. Now with higher revenue, people are paying less money for this thing. So like there's still margin of safety. Like you still can go from 177 to like 305. So that's what I mean by margin of safety. You're not buying at the absolute top. Okay. So this one, yeah, margin of safety, no problem. No problem. Okay. I'll say good, no problem. Yeah. Okay, the next thing that I do, I'm gonna show you an example of where I did this before for another company. But is you want to look at the reviews of the company. This is extremely important. Very, very underrated way. Especially if you do not, yeah, especially if you're not in this industry. Okay. So for example, I can show you a company that I did this before. So I did it for CrowdStrike right here. So CrowdStrike, I told you guys my position previously. I was up about 35%, 40%, yeah, 35% when I sold the position. And the only reason why I know I could buy this company is because I felt safe holding this company, right? And the only reason why is because I did the research on the reviews and stuff like that. All right, so you definitely should do this. Just go to Google, type the company name and type the reviews. And I've read through a ton of reviews. Okay, don't read the employee reviews. You want to go and read. Okay, Gartner, for example, sometimes it can be rigged. Okay, this is for cybersecurity. Sorry, yeah, this is for like software. This can be rigged, so don't take this to the grain of salt. But obviously, go and read these reviews, and if it's overwhelmingly positive, like you cannot fake 2,000 reviews. You can fake 50 reviews, but it's very hard to fake 2,000 reviews. Okay, even though you're a big company. So when you go and read the reviews, right, you can clearly see like a lot of people actually really like this product. It's very, very easy to use. It's great for whatever and stuff like that. And then sometimes, okay, I can show you the website. So if you go CrowdStrike, right, you want to go on there, and then you go and obviously this is going to be a bit biased because it's on their company website. But if they go and like feature customer reviews, for example, you also want to go and watch their customer reviews. You can see here, right? So Intel uses them, who uses them, Salesforce uses them, all the biggest companies in this space use them, for example, right? So you just go and like just go and get a sense, get a vibe, okay, of how the reviews are, okay. So CrowdStrike over here, then you just go and do multiple. You just go and really read, okay. Yep. So I'll give you an example of a company that, even though the stock may look fantastic, or whatever, or the company may look good, people that are starting to have very bad reviews. Okay, so Adobe, I'll just show you Adobe. Adobe is like one of those companies. Okay, Adobe is like, okay, this Google stock right here. Let me show you. Right, for example, like on their earnings or whatever, from a financial basis, everything looks fine. Okay, everything's like, okay, it's great, blah blah blah, stuff like that, etc. Quarterly earnings, everything's fine, blah blah blah. Okay, but when you go and read Adobe reviews, right, it's like probably the worst thing I've ever experienced in my life. Okay, to be fair, I've also used Adobe's enterprise product, and in my company last time, nobody in the company likes it. So it's like, this is terrible. This is terrible software. Okay, so if you go and read Adobe reviews, for example, this is a company that like I probably will never invest in until they fix something. But like people just don't like their product, and like it starts to get worse over time. Like the amount of value that they provide is like, you if you keep increasing prices, for example, but you don't provide more value, people are gonna leave, people are gonna complain, right? And that's basically one of those companies right there. That's why I don't invest in Adobe in general. Okay, so I mean, you don't have to believe me, honestly, but like just go and do your research, right? That's why I'm kind of teaching you guys how to do research here. But yeah, what I do is that, yeah, like Adobe is a terrible company. I've experienced it myself, and then I went to do reviews, and it's like, okay, it kind of checks out that I'm not the problem. People actually really hate this product right here, and yeah, even though the revenues look good, I'm definitely not investing into this company. All right, so yeah, that is kind of the research you want to do. This is extremely important, so I definitely don't recommend you skip this. All right. Okay, so the company that we were researching is like Paylocity, right? So let's just search Paylocity reviews. Okay, I'm not gonna like go in depth about this. However, like you should probably do this. Like you should spend more time than I'm spending because I'm just showing a tutorial right here. Okay, so it doesn't seem that there are a lot of reviews on Paylocity at this point in time. But let's see what people are saying on Reddit. Reddit. Okay, so I'm in public. We do payrolls. What's the platform like? Okay, so this person is wanting to buy this product. So people are gonna give reviews. Your service experience will be better at PCTY than Paycor, but definitely not better. It's fast. Paylocity is far superior to Paycor, etc. Okay, you can see 15 people have agreed on this thing. So like there is consensus that Paylocity is not bad. For example, I appreciate this feedback, etc. I don't have any experience with Paycom. Okay, I don't know what this is about. I agree with this, although I cannot. Okay, we just finished our Paylocity implement. The second I've been through as many, and well, the outcome is worth it. Okay, so it's like it's not only like one person agreeing that this product is not bad. Okay, it's like multiple people agreeing. Um, yeah. So that's basically the entire process. It's literally go and reading for yourself. It doesn't take a lot of effort, but you think about it, right? If you're gonna spend, sorry, if you're not gonna spend, if you're gonna invest your hard-earned money into something, you better make sure it's the correct thing, right? It makes sense, right? So yeah, that's what I would do. Okay, I really recommend you to do this. In terms of Paylocity here, I did not really do a very thorough research right here, but please do at least half an hour of reading on this thing. Okay, so please spend more than 30 minutes on this thing right here. This will make it or break it, honestly. Yeah. Okay, because this can really change your opinion about a company, even though the financials look good. Okay. Yep. Yep. You wanna see if they're like user interviews, and then existing customers, and then like past customers, why they left, etc., etc. All right. So in terms of this, Paylocity seems like an okay company. I won't say it's like amazing, but it's like they people have said this is worth it, right? This is worth it. So the product works, and I would say it's like kind of above average to good, above average to good. Okay. Yeah, I'll just put above average for you guys so you can see the process. Okay. Okay, is there a community of people or content creators starting to really talk about this? Okay, the reason why I kind of think of it this way is that if you think about it, right, a stock price can only move when. Okay, let me go to the Paylocity stock price. Yeah. Okay. Yeah. The stock price, right, can only move, right, when a bunch of people start agreeing that this thing is undervalued or this thing is worth buying now. Okay. So the only reason why my money or your money is going to increase is because other people agree with the same point. So like I could buy 50,000, $100,000 of this stock right here, but I'm not going to move the stock price. The people who are going to move the stock price are the institutional guys, the hedge funds, etc. And then like the people on YouTube, right? The people on YouTube are making videos, and then for example, like every day they make a video, and then like imagine 5 people start making videos, 10 people start posting about it, and then on Twitter, on LinkedIn, for example, like 30 people start posting about Paylocity, and then there's this fever, there's this momentum of everybody starting to believe in this thing, and that's basically why Bitcoin also like increased, for example, right? Everybody started believing in this philosophy of Bitcoin and why it's important, etc. And then they started buying this asset. In the same way, right? You kind of have to think about it the same way. This is like marketing. This is the same thing. It's like you need to be if you're a bit early to the party, and then you kind of see these things play out. For example, right? You're able to capture or buy at a lower price, and then you're able to gain more on the upside when the stock price actually moves up. Okay, so like that's why like YouTube content creation is actually important. Is in a sense, it's a form of marketing for these companies for the stock price at the same time. All right, so this Paylocity, okay, let's see on YouTube who is basically covering this stock, right? Okay, so for example, Paylocity, okay, nothing's really happening. This is 5 years ago, which is disgraceful. 2 years ago, no views. Okay, you see, it's like you can clearly see. Okay, there's not much chatter about this thing, right? This is really not much. 430 views, 15 views. This is AMD. This is not even Paylocity, Amazon, Swing Stock, Paylocity 3 weeks ago, 3 months ago. Yeah, so like you can clearly see, it's like this is something that people have not been starting to look at this point in time. All right, so I would say is there a community of people talking about it? No, not really. No, barely. Like literally nothing. All right, the next one is like the CEO investor friendly. Okay, so just now I got this information already. The CEO is called Toby J. Williams. And then, okay, this guy is the guy. Okay. Yeah, okay, so basically you just want to read like what's his deal, like what's his problem, bro, like where does he come from, what does he do, etc, etc, what's his background, how long has he been running this company, is he the founder of this company, etc, etc. Yep. And then if you can, like, also go to his LinkedIn. Okay, so that's a great way. So usually CEOs who are investor friendly, for example, okay, let me try something. Okay, Toby J Williams interview. Okay, if a company is doing very well, for example, and then they, a CEO, his job is generally to pump up the stock price because his earnings or his compensation is generally directly tied to the stock price as well. So the higher the stock price, right, climbs, the more money this guy's gonna make. Okay, so it is actually in his best interest for him to actually go on podcasts to talk to people on YouTube, for example, and then yeah, he's able to basically pump up his own stock, right? Talk about his company, how great they're doing things, etc. Okay, but just from the first search volume here, for example, let me just Paylocity, and then I'm just searching for him, for example. I don't see him at all. I don't see, literally. It's like I can't even see a single. There's not a single video of him at all. So like the CEO is clearly not investor friendly. Okay, even though the company is pretty solid. Okay. How about I just try Paylocity CEO interview, right? Is he going on CNBC? Are the Financial Times talking about him, for example? Okay, so 5 years ago, 3 years ago, 2 years ago, for example. So this company clearly does not care. They completely don't care, and that is why you can see the stock price reflects that. The stock price is also very muted, right? When I mean, you may have a great company, honestly. Like, this is actually not a bad company, but you can see when the things don't align, right? Your stock price is not gonna move, and then your investment is not gonna move at the same time. Okay, so this one here, nope, not investor friendly. All right. The next thing that I look for is that are there any competitors in the space and what is their revenue or market cap? Okay. The reason why I look at this is because when you buy a specific company, generally investors are going to look at your company and then versus another company. All right. So I do not know other companies in the HR space, but let me try to find are there any companies that are um, public companies in the HR space. Okay, let me just check what their products are actually. So they have finance, HR. Okay, HR, finance, B2B, SaaS space. Top 20 HR. Okay, I'll just pull a random one. Okay, so for example, like Workday. Workday. Is Workday a public company? Yeah, okay, so they're a public company, for example, right? So what I do is that, for example, Workday right here, what you can do is that, okay, this company is a $61 billion company, and then, okay, so they clearly have increasing profits over time. Okay, so what I'm going to do is that, okay, I have the ticker symbol, right, W day. Okay, I'm going to come in here, and I'm just going to put in W day as well. Okay, and now I have a strictly comparison from my company that I potentially want to invest in versus another company that is like, okay, are we gonna grow as big as these guys, for example? Okay, so then I look, market cap 9.62, market cap 61 billion. So in my mind, it's like, okay, if this company actually executes, for example, they grow, they can go from $10 billion to $40 billion. It will 4x my money, right? Because even the biggest guy in the space, for example, is like 61 billion. So to get to 40 billion is not even the biggest. All right. So that's like a good sign that there is room for this company to grow and to grow their revenue. That's the first thing. Okay. The second thing is you want to go to their earnings. So okay, we just go back to the 5 year, right? You go back to the 5 year. We can see that on a revenue basis, yeah, okay. The biggest guy in the space, for example, is doing about 2.35 billion, right? On a quarterly basis. On an annual basis, the biggest guy in the space is doing about $8 billion in revenue, versus we're doing 1.6. So isn't it reasonable to assume that my company can still grow? Yes, it's quite reasonable to assume because I can almost like 4x my revenue right here. Basically, I can 4x the revenue. Yeah. Okay. So like this is how I think of things. It's a very straightforward math equation. I go and find a similar company, and then I just look at the comparison. It's like in my brain, it's like, can this company go from 1.6 billion to 2 billion? If it can, right, then obviously the stock price will increase at the same time. Okay, so this one is here. Yes, so it's yes, still can grow another 4x, no problem. So like market is big enough. I call it TAM, the total addressable market. Market is big enough. Okay, and then lastly, what is the big narrative story that's going to happen soon? Okay, so this right actually is like probably like the most important or like the second most important thing among all of the research that I've done. Okay, this one is that, is there anything that's happening soon? So for example, in this company here, is there some new AI products that's going to come that is going to completely shift the revenue? It's going to like increase the revenue. um, is there a new product launch or something? Is our current customers, for example, suddenly buying our products very very fast because like the sudden need or demand for our product, and so the revenue will basically grow very very fast. Okay, um, I'm sure you guys have heard of Palantir, right? So Palantir, for example, the reason why the stock price is like going so crazy is because they started to find something that works, and then their revenue started growing very fast, and then their revenue started accelerating. So when you have revenue acceleration, you generally see the stock price also like just completely increase very very fast at the same time, right? So oh yeah, okay. So exactly this what I'm talking about. So guys, you can see it's like they've been slowly they just figure it out, they just grow, and then they figured out something here, and then the stock price you can see is climbing way faster. The gradient here is like faster than here. This one is like slow and steady. Then suddenly boom, go up, boom. Then you can also see that the market cap just like completely boom, right? So this is what I mean by the company that you buy, right? You need a story. Like you're gonna like spend your hard-earned money to invest into this thing. If you buy it and the stock price goes nowhere, you don't really make money. You're just like wasting time. You're just wasting the time value of money, right? So that's how I think about things, right? You want to buy something where there's a very clear, defined story that's going to happen soon, okay? So that if you buy and then like 3 months from now, it's gonna explode, or like you buy now and 6 months from now, for example, it's gonna explode, right? Like that's a very very good way to make money because it's like you know that the momentum is in your favor. If you don't have a story, right, people are not gonna care. People don't care, right? Got no investors. Your stock price won't increase. Your market cap won't increase, right? So these things are important. Like people don't understand. It's like it's not only about whether it's a good company because we have established in our first two filters, this is a good company. This is a fantastic company. Actually, it's a very stable, boring business that grows. It doesn't grow very very fast, but like it's a good company. It's margin of safety, right? But yeah, it's not investor friendly and like there's no story. No, not really. I don't see. Okay, the CEO does not go on CNBC and talk about the story. It doesn't tell me why I should buy the stock right now. Even if I go right here, Paylocity, right, and I go to the news section, right, I don't really see. I don't really see like what's happening in this company. Like I know they grow. I know they do their jobs. But they don't seem to be like, yeah, they're not growing like super fast. So it's like not exciting. So my stock price is not going to move, right? So you can see, right, it's very very straightforward. It's like you need to have a story, and the story needs to be different. Needs to be revenue growth. We have AI in our products. Oh, suddenly there's a COVID crisis or whatever, and then people start buying our stuff, right? So it's like you really need a catalyst. They always call it a catalyst, right? This is a catalyst. Okay, it starts increasing revenue. Yeah, okay, obviously the stock price you can see is like completely transformed. Completely transformed. Yeah. Okay. Slow and steady, right? Sometimes you still can have your stock price increase, but if you have a CEO that doesn't care about media and like investor friendly, like your stock price is not gonna move. All right. Okay. Um the last sauce, the last good shit that you need to do. Okay, so imagine that you had all of these things and then they're fantastic, everything's fantastic. Okay, the last thing you want to research is the actual CEO itself or the management team, etc etc. Okay, so the first thing, CEO interviews. Okay, I'll give you an example, because normally what happens in a public company is that the CEO, his job is to be forward facing. His job is to tell the public, hey, investors, this is what's happening in our company. We're doing a fantastic job. And then he's going to spread this news across various media outlets. All right. And then you're going to go through this process. Uh, so I'll show you examples of the companies that I bought or what process I went through. Okay. So the first one I went through, I can show you Robinhood. Okay, so Robinhood right here, Vlad Tenev. I've watched almost like 15 interviews of this guy, by the way. And when I watch, for example, I don't watch like very very short interviews. I don't watch like 9 minute interviews. Seven. I do watch these sometimes, by the way. You can see like I've watched some. Um, but I do watch stuff like this. Like it's an hour long. It's an hour long. 52 minutes, 11 minutes, 40 minutes or whatever it is. Yeah, stuff like that. I think, what is that guy called? Is it Amit Cook Reg? The yeah, this one. Okay, so basically, like after I watched this, I basically bought the stock. Okay, because I listened to this guy for 58 minutes talk. You generally trust people a lot more after you've listened to them for like half an hour. All right, but if I just hear you for like 3 minutes, 7 minutes, I don't really trust you. But when I basically like listen to you, understand your thoughts, understand how you will run this company, understand how you will grow my money, I become very very comfortable with putting my money with you, basically. All right, so yeah, you can see it's like you got to do like research like this, and I don't know whether it's boring to you, but to me it's not boring, because like it's an opportunity to make money by me just watching this video, and like yeah, putting $40,000 down. I've made almost $130,000 in profit, right? So if you want to spend your time, you probably should spend your time on shit like this, like just letting you know. All right, so what I'm looking for, right, in these interviews is very very specific. Okay, I can tell you the source right here. Okay, so the interviews, right, what you need to look for is that like what is like the motivation for this, like motivation of CEO or founder, etc. Right, if all they care about is like just making money, it's probably not good enough, because a lot of people want to make money, but the true companies that really produce excess returns are the ones where the founder is like believe in the mission, right? So this guy really believes in the mission. Okay, the next one is obviously is like if they have a fantastic background. So this guy, for example, like Vlad Tenev, right? Let me show you his background right here. Let me just pull up. Okay, so Vlad, for example, I believe he was from Stanford, and then he is a math background. Okay, let me just show you guys. Yeah. So for example, he's from Stanford, and then like previously before he was doing all this Robinhood shit, he was basically a math background. Okay, so if a guy is like from Stanford, fantastic background, and like math trained, right, and then like he runs a stock brokerage business, yeah, he's probably going to be really good at math. He's probably really good at calculating the numbers. Okay, so like very very strong background, technical background, etc. And then yeah, it checks my boxes basically. And then you want to ask him, or in the interviews, you want to hear what is the direction of the company. Okay, you want to hear like how are you gonna make more money in the next 2, 3, 5 years, for example. Like you want to hear what the CEO has to say. And you normally, for example, Vlad, for example, he always talks about this new product launch. We'll launch a new product in our stock brokerage business, etc., etc. We're gonna have like new product lines. How are we monetizing more of our customer base? What is our customer satisfaction? Okay, if he talks a lot about customer satisfaction, that is a very very good sign, because I don't want a CEO that only brings in money and then all of the customers leave, right? You want to make sure that all your customers are very satisfied and happy with your service. If they're happy with your service, right, eventually more they're going to tell more people, right? They're going to tell more people, and it's basically more money for you and the company, and that's how your stock will basically increase at the same time. Okay, so very very simple stuff is like simple business stuff, man. It's like if the guy is motivated, believes in the correct mission, has a good background, means he's competent enough to actually run this business, and then like how are you gonna make more money in the next few years, etc. And then the product launch, like how are you gonna make more money from existing customers, or how are you gonna acquire new customers, for example, and like do you actually care about whether customers are happy with your product or not? All right. For a company like Adobe, for example, I told you just now, the reviews like suck. The reviews are terrible, right? And that's why I don't invest in it, because I know that people are unhappy about the product. Yeah, but this guy, for example, he really cares about the product and stuff like that. So yeah, this is a good green flag for me. Green flag. All right. Okay. Besides just the interview, right? If you want to do additional, oh sorry, I'll move on to the second one. So yeah, after I do the CEO background check, the last thing that you need to check is the team background. So I mean, generally, when you get teams on, yeah, the backgrounds of the teams are actually quite well run already. Okay, so let me just go to Google. Oh, I'm so sorry. So sorry, missed out one thing. Yeah, CEO interview. So for example, the other ones that I've also researched was that when I bought Palantir, I watched a bunch of Alex Karp content as well, and I found out his background, I found out his motivation, etc. and stuff like that. So I did a bunch of research on him. All right. When I bought Hims, for example, this guy is the CEO. I basically invested a lot of time into watching a lot of his content as well. Last time he did not do a lot of content, but recently has been increasing over time, and then he's been more public. But generally, you can find some stuff about him as well. You can find some stuff about your CEO if they are investor friendly. All right. Okay. And then the next one, last thing is the team background check. Yeah. So as I was saying, for example, this one over here, I'm gonna go to the Robinhood management. Okay. Okay. I'm going to go to our amazing company, the Paylocity company. Okay. Yeah. So you can see a leadership. Okay. So who is running this company right here? This imaginary company that we have been. Okay. So for example, you can see. Okay, this guy is the chairman of the board. I don't really care about the chairman of the board because like this guy doesn't do shit. Um, Usually people on the board, right, they don't do a lot, they just give advice. Okay, so not super important. All right. The CFO guy, for example, this fundamentally like is not a finance company, so I don't care too much about the CFO. This company right here, I would say is a chief strategy. So it's more a product software business, right? So chief strategy is extremely important. What is the strategy? So you can figure out like what this person is, where did she work at previously in the past. So I'm just gonna search her up on LinkedIn for you guys first. Holly Thorpe. All right. So this person here has a strategy. Okay, so she's over here. She's from Chicago. She's been working there 7 years. Okay, it's okay. Advisor. Okay, so she was a investment banking background. Okay, so she's basically a finance person. Okay, you can see technology consulting. Okay, she's a consultant, IB banker. Um, yeah, she's basically an IB banker. Okay, okay. So, but the thing about finance people, right, is like they're able to they know how to squeeze profit out of something. But this is fundamentally a technology platform. So I want to look at who is actually on the technical team right here. Okay, so senior operations guy don't really care. Sales guy don't really care as well, because generally product is the one who will really push you out into the market, right? So maybe we need to look at this guy. This guy and okay, this is security, HR, strategy. So maybe this guy here, Adam Barley. Okay, so I'm gonna search this guy on LinkedIn for you guys. Who else should we find? Client services, sales enterprise, vice president, product and technology. Okay, so I'm gonna find this person as well, Christine. Okay, so whenever I look at a management team, right, I'm gonna look at whether these guys have worked in bigger companies or like similar companies, because if you have done it at another company, for example, it is quite reasonable to think that you can execute and grow in this company because you've done it before. Okay, this is not really good, but she's product and technology, and she's been here 19 years. Okay, I'm not saying she's bad. I'm just saying that considering the growth rate, for example, she's probably not going to change your entire life, even though that okay, she's a computer science background, etc. But you can see, right, like from a product perspective, every quarter they grow revenue, but it's not explosive growth. So it's like your revenue growth is going to be put into the hands of these people. Okay, so not super impressive so far, but I mean, not bad, not bad. And then we're also gonna search this guy, Adam Beerley. Okay, Adam Beerley. I hope I spelled his name wrong, but I can't even find him. Okay, so guy not even on LinkedIn. How about Melissa King? Let's see if Melissa King is on LinkedIn right here. Melissa King. Come on. Come on, Melissa. Where are you at? How about Paylocity? Alright, there we go. Alright, so Melissa right here. So she's drilled to end. So she's new. She's new. Okay, but you can see like okay, she's worked in a separate company before, probably quite similar. So hopefully she can turn things around for us, or for this company right here. But she is a background in. She's a business school student, so she's not really a person. But yeah. So okay, the team is not like super impressive, but it's totally fine as well. Totally fine. All right. So my assessment so far, step one and step two. So step one and step two is basically for you to assess whether this is the correct company or not. And so far, let me just run down to you what I've learned from researching with you over the past half hour or so is that, yeah, okay, the revenue growth, financials, everything looks good. Okay, no problem. Absolutely no problem. They produce revenue over time, right? As previously mentioned, they increase revenue, they increase profit over time. No problem about this. Okay, what I don't like, valuation a bit expensive, margin of safety okay, review of the companies, okay, people have to say it's worth it. It's not amazing, but it's worth it. Okay, so not amazing. So it's not A plus. It's more like B plus, which is not bad. It's okay, or like A minus. Is there a community of people? Nope. So your stock price is not going to move. Is the CEO investor friendly? Nope. Stock price not going to move. Are there competitors in the space? Yes, you still can grow. So no worries about growing revenue. No problems about the actual business itself, but no story at all. Okay. Um, in terms of the CEO and stuff like that, yeah, seems like an okay guy, good background, stuff like that. The team is not A plus, but it's okay. It's not that bad. I mean, I'm pretty sure they're pretty good, right? So you can see, would I invest in this company? From step one and step two, no, I will not. And the only reason why is because of these things. No community of people, CEO not investor friendly. There's no story. Nothing's gonna move the stock price. So like, I'm not gonna make my money back. How is my money gonna be made back? I have no idea. It's uncertain, right? I don't really care if it's like, yeah, look, just look at that, right? like the stock price has not moved anywhere for the past 5 years, and it is very clear why. It is not because of the company. The company is doing fine, but if you want to make money, the stock price needs to move, and the stock price is not moving. So just letting you guys know, I will not be investing into this company. All right, so that's basically the research process right here. Okay, imagine you actually go through the process and everything's a green. Everything is like, yeah, fantastic. Okay, and then you're like, okay, now I'm ready to invest into this company. All right, the last step. After deciding that this is the correct company, okay, you go into entry price. Okay, this is really where you're putting your money at risk at this point in time. All right, so this is really important. After you decided that, okay, this is the correct company. All right, so don't, like I said before, in at the start of the video, right? Don't make the same mistake of me as Alibaba. So Alibaba, for example, for step two research, everything is fantastic. Everything fantastic. Jack Ma, he's a really good talker, man. He's a really good talker. He knows he's investor friendly. He knows how to talk shit. Yeah, everything was fantastic, right? But entry price a bit wrong. Okay, so how do you actually determine entry price? All right. Okay, so let's not use Paylocity right now. Let's imagine like Wix. Okay, let's imagine this. Okay, maybe I'll just choose a bigger technology name purely because it's easier to wrap your head around it. All right, so let's just use an Amazon or Google, etc. Okay, so it's easier for you guys to wrap your head around. All right, so for example, Amazon or Google, they're similar companies. So imagine you are like deciding whether you want to buy Google or not, right? And then Amazon is you're kind of like comparing yourself to Amazon. Okay, so for example, Alphabet right here, um, everyone has a growth story. Everybody has a growth story. Right now, the PE, for example, is anywhere from like 18 to 24 ish. Amazon is like 32 to 34, which is a bit more expensive, for example. Right. So clearly, Alphabet, for example, like, yeah, it's like it seems cheaper on if you just like compare it side by side, right? Alphabet is a bit bigger at this point in terms of comparing to Amazon as well, right? And then now we talk about valuation. So what is the price that we're gonna buy at? Okay, so stock price does not mean anything, right? Market cap is kind of what you're looking for. Okay, so for example here, okay, Google all-time high right now. So probably do not buy. like straightforward, don't buy at the top. Okay, you want to have like margin of safety. So this one cannot buy. This one also, Amazon, for example, nearing the top as well, right? It seems a bit expensive, especially if you this is at an all-time high and it's still like more expensive than Google, for example, right? So yeah, probably don't buy at this point in time. Where would I buy? If it was here, for example, previously, it's like there's a bit of margin of safety. Yeah, it's totally okay to buy. Okay. Um, let me show you an entry of what I did with Robinhood so that you can get an example. Okay, so Robinhood. Okay, sorry. Let me just check my entry price one time, so I don't get it wrong for you guys. All right, come on, load. Okay, all right, thank you. Okay, so my entry price was $23. Okay, so $23. Um, okay, I'll show you. I think I bought it in 2024, I believe. Yes, here we go. I bought it in 2024. Yep. Okay, so I bought it on around 29th October, and I remember this vividly, by the way, because I remember it was like a sharp 12% drawdown here. Okay, so it basically like it dropped like almost 10% over the past trading day, and I just bought it here. So it was almost at an all-time high. So at this point in time, it was like going up, it was going up. Right, it's a good uptrend. It's a good uptrend. So it's a good momentum in the stock. Everybody was like feeling good about the stock, for example. And then one of the earnings days that it missed, for example, and it's like a bit slower revenue growth. But everything, the company was looking fine, and then the momentum is still there. For example, when it dropped, for example, then I just bought. Okay, the reason why I bought the entry price here is because it's like you get a discount basically. You can see it went from $28 to $23, so it was a discount. That was the first thing. The second thing is that there's a margin of safety. So in the past it was like $70, and then like it's gone down to $23. So like a big margin of safety. So even if I bought here, like it was not really like super expensive. All right. So that's kind of basically why, right? Everything from uptrend, the price action is doing okay already. The price action is going up, right? So you are riding an uptrend. You're not riding a downtrend. You don't want to catch a falling knife, basically. Okay. So that's the first thing. And then margin of safety, it seems like okay, it's a massive margin of safety. So I'm not really too worried, especially it's going on an uptrend. Yep. So those two things basically give me a peace of mind. For example, okay, a stock where you don't want to be buying is like, for example, like Lululemon right now is getting completely hammered. Just show negative 18%. Are you kidding me? Holy shit. Okay, yeah, like this kind of thing, right? Entry price probably don't go in like right now. So like Lululemon is still on my list of like potentially interesting, but yeah, you can clearly see what happened, right? Like don't play with fire. Okay. Okay, you see on a 5 year basis, you can see this is what a falling knife looks like. It's like, oh, it goes down, boom, 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 boom. Oh, we thought it recovered, goes up, and then it goes down, and now it's like completely, I think, on the all time low. So investors don't care about this stock. They hate this stock. The story sucks. The earnings guidance is being cut. Yeah, basically like the worst news of all time. It's like game over, man. It's like complete game over. You can see this. Yeah. So these types of stocks, for example, is like the company is fine. The company is actually doing okay. But then when you look out from a like 6 month, 10 month period, for example, it's a falling knife, and then everybody hates the stock. Momentum is going down, etc. Yeah, this is where you don't want to buy because the dip, right, will keep dipping. You keep dipping until it's like nobody else wants to buy this stock, and then you buy. So I would suggest is like if you still see falling knives, don't buy the falling knife. All right. Yeah, you can see it's like yeah, it was almost what, a $60 billion company maybe. Yeah, 60 billion, man, and now it's like 19 billion. It's crazy. Yeah, so just be cautious, right? Your job is to make money. Your job is to make money. Don't be like emotionally attached to the stock. Yep, I want you to get rich, bro. So yeah, don't catch falling knives. All right. So I hope that makes sense to you. So just to summarize, entry price, make sure you have margin of safety, and then make sure you don't catch a falling knife. And then like anytime there's a down day, on an uptrend, for example. Okay, let me just write this down for you guys so that it's easier for you guys. So it's like you're gonna write on the uptrend if there's a down day, then and fundamental seems fine, and then there's margin of safety. Yep. Then you should be fine. Yep. Okay, that's generally when you buy. All right. So hopefully you have enjoyed this video. I think it's a really long video, but yeah, please let me know if you have other suggestions on what you think I should do. Yeah, I really hope you enjoyed this video and like take notes and stuff like that. And yeah, please use this information. Okay, even if you watch this entire video and you don't do anything with it, like it's on you, bro. It's really on you. So I hope you get rich. I hope you use this information. I think people charge for this information. And yeah, I'll see you in the next video. Let me know what else, what other information, what other videos you want me to create and stuff like that. All right, see you.